Hey guys, how's it going? Hope everything's going well. Alright, I wanted to do a video on gold, and I was doing videos where I said that, you know what, it could go as low as, what, like 1240, 1245. Currently, the low in gold as of a few nights ago is 1238. As of like an hour ago, I haven't checked right now, gold is at 1257. So it's jumped nearly $20 since that time. And one thing to note, what I was missing in my analysis was talking about the Chinese yuan and the relationship with gold right now. You know how I talked about gold and the Japanese yen? Well, now the Chinese yuan and gold are doing what those other two currencies used to do. And if you look at it, if you see the Chinese yuan like going down value, right, getting devalued a little bit by a little bit each day, right, gold was following that. Same thing with platinum. I think that this is a short-term correlation because there were other moments where the Chinese devalued their currency, gold popped up. This was like a few years ago, so that's a FYI. And David Brady, one of my new favorite analysts, he was talking about the dollar, Chinese yuan, and he was talking about a blow off top at 6.70, and that was a few nights ago where gold was 1238. After that reversal, like I told you, gold has gone up $20. So far, that's good for gold. Another note. Oh yeah, going back to this. In terms of the Chinese slowly devaluing their currency to 6.70, my interpretation, along with some other analysts who are smarter than me, they claim that the Chinese want to tell Donald Trump, like, hold off your rhetoric against us because we can retaliate via the FX market. I mean, yeah, you put a tariffs on us, we'll put tariffs on you, but we have another weapon. That is the Chinese yuan, right? And in addition to the Chinese yuan, they could start dumping treasuries, right, if they wanted to. So that's just something to note for the next election this fall. I wouldn't be surprised if you saw some fireworks happen. Some devaluation of the yuan, stock market sells off hard, and then the Democrats gain control or get more seats than what people are thinking right now because the Democrats have a bunch of Looney Tunes saying crazy things like Maxine Waters and whatnot. All right. Another analyst that I like is Dana Lyons, and Mr. Lyons, he has this nice trend line chart of gold, right, of the GLD, the ETF, and it's showing that gold should bounce if this trend line holds. This is going back to 2015, and this was when the first Fed funds rate was hiked, right? Last Fed funds rate was a few weeks ago, so hopefully this will allow gold. I mean, this will get more investors into the GLD and gold. Another thing to note is that the DSI for gold was 7 a few days ago, so that was really, really low. And I started seeing people mocking gold and silver investors. So when you see the DSI very low, that is usually, in my opinion, bullish for the commodity, especially when you have tax cuts, when you have rate hikes, and you're starting to see negative emotion in this metal. A lot of funds were getting rid of gold based on the data that I was looking at. And besides that, going to the S&P 500 now on a different note, I remember I showed you, let's get this chart a little bigger. This is by this one Twitter guy, Troy Bombardia. This doesn't have that much of a following, but I like some of the stuff that he posts. Regardless, right now, you saw the market top out at what, 2780-ish, and I was doing a video saying like, you know what, we should get a correction to around 2700. We got that. Now I've seen some technicians saying that we could go to around 2665, around there, but we should go higher from there. Regardless if we get there, I do expect the market at least to hit the 2800 mark. I wouldn't be surprised if we get through the highs this summer. But this fall, I'm a bit concerned based on this trade war rhetoric. It's going back and forth, and the elections that are happening this fall. So those are my only concerns. If there is a deal with other nations, then that should be great for the market. Right now, we don't see the yield curve inverted, even though it's getting narrower. So that is something on my radar. But until then, until we see an inversion of the curve, the market should still go higher. But going back to what this guy was saying, Troy Bombardia, the put-call ratio just spiked to 1.32. That's usually a high number. And intraday, I noticed some people saying it was 1.70. The last time those happened, right, those two levels, was in January, and it was in March. I believe one time it got to 1.50. This must have been in March. That's, in my opinion, a time not to be aggressively shorting the market, but maybe initiating some long positions. I should have maybe waited until that moment, but I got a little too antsy and put some bullish positions, some in the options market, some individual stocks that were extremely oversold. But yeah, I expect the market to go higher from here until late summer. I expect gold to rally. And yeah, let me know what you think, guys. And I'll talk to you later. All right, bye.